All right, so the market did go up. Is it going to keep going? Is it going to have any major corrections? Are there going to be any major pullbacks before it reaches the high? This is what we're going to talk about. It's February 5th, Sunday night. We had a very strong market in January, surprised a lot of people. We, of course, were not surprised by the strength. We knew that the strength was likely to come in this year. It did on the short term. It didn't come down as much as we thought into February 3rd. And what I'm looking for now is a continued rally until the middle of March. Now, that doesn't mean there won't be a correction. Expect probably a couple more day correction until the 7th or 8th this week, but nothing major. Market's likely to continue higher until the 15th of February, and then the second half of February could have some correction down toward the end of February, followed by another rally until the 15th of March, okay? So we're on an upswing, and the upswing will continue. It will probably continue to exceed what people expect on the upside. They're going to think a bull market has started, which is not quite true, but it will be stronger than expected. And that's the way the market works. It tends to shake people out of their doldrums by surprising them. And in the maximum surprise would be if it goes straight up here. Nobody's waiting for that, and nobody's ready for that, and we don't know how to get into it, etc., which means that by the time it's near the high, people will start buying, and then they'll get hurt. What's after, the probabilities are after the high in March, we'll see a fairly decent correction for the first time in this year, and that correction could go down into roughly May 10th. From March 15th until May 10th, there's a vulnerable area of time for the market, and for the super bears, there is a small chance we could have a very, very big break during that period of time. But the probabilities favor, probably it's just a C wave of a correction that's going to be in progress through February and March. And the B wave high will come in at the middle of March, followed by a C wave into May, okay? And then we've talked about later in the year, we expect a continued rally, probably significantly higher by the end of the year, and everybody's going to be wondering, why didn't I buy it? Meanwhile, I wanted to show a few examples of where we're at and patterns that have been repeating. This first one is 18 years, 2 months ago, and we've been talking about this Moon K2 conjunction series that's been happening in the short term, and of course the moon cycle is extremely important, and we want to see when the Moon and K2 pattern was in the same phasing that it was recently. Then we had a 7-month cycle, which was continuing to repeat pretty closely, but it's a little bit off now at this point. These cycles will not repeat forever. But the 18-year, 2-month cycle is the last time you had this Moon K2 conjunction sequence phased the same way. And look, this is going back for over a year. How incredibly similar it was, and how incredibly likely it is that the ongoing path forward will look like this. And also notice it is basically, in a sideways, an up to sideways phase, and then a bit of a correction. Similarly, we looked at the 1934 market, same thing. We had this up phase, which everybody didn't expect, and then it went sideways, and then down into May, and then we go up again. So we have two things saying the same story. The other thing I wanted to point out is that we have a little curious trend indicator, which is remarkably simple. And here you have a chart where you can see that intraday, these were 1 day at a time, they're a 10-minute bar chart. We had many, many, many correct swings generated by this particular formula, and the formula was immensely easy. When the market is in a bull phase, which it seems to be at the moment, you buy when the sun rises, and you go short when the sun sets. And you'll notice this last month, you had about a $27,000 profit on one E-mini. Just doing that was about 70% accurate. And it was over 80% accurate on the long trades because the market's been going up. So that's a remarkably simple thing. Oh, by the way, we're going to be giving another of our forecasting masterclass courses. It's going to be expanded, and we're going to be emphasizing a larger amount of the course will be on examples of the forecasting technology. We've had extremely good feedback from the prior courses, and we're going to integrate the knowledge that the students give us to improve and make it more and more powerful. And that'll be on February 18th. If you want to see more information about it, take a look at the information below. And usually would like to interview people. I like to have a phone call with people who want to take the course. This is not trivial. It's very powerful. And I just don't want to kind of, it should be for serious students, people who are really interested in this stuff. I wanted to mention also that the other thing that's kind of curious is that if you look at the lunar cycle, you know, new moon, full moon, and stuff, if you phase it correctly, it's actually quite a moneymaker. It doesn't make money every month. It doesn't make money even every year. But if you look back to 1997 when the S&Ps began, you'll see this is the strategy performance report of that formula, and it has been making quite a bit of money through bull markets and bear markets and sideways markets, and it's been making money the last few years as well. So it's just an interesting thing that the sun and the moon are obviously significant influences somehow on people's psychology and also affecting market behavior. So if you're interested in really understanding markets and really being able to forecast yourself, not relying on me or anyone else, the knowledge is sitting there, you just have to use it. To find out more about the forecasting course, click on the link below, right here on the screen.